On a broader level, just aside from the London market, what kind of activity do you see in the pipeline for fourth quarter? I mean, do you see a reluctance by companies to really engage with major actions because of the election, because of potential volatility, because of geopolitics, or do you see it really ramping up?
Yeah, so I've always, we always talk about backlogs, and I always tell my own people, be careful, because backlogs tend to grow and expand and then stop. There's a pretty good backlog growing of IPOs of companies. Whether it happens or not is a different thing. And M&A, yes, I do believe, I can't prove, it's more anecdotal, that it's tampered quite a bit by not the election, maybe the election, but by rules and regulations. And you talk to a lot of boards of directors here. They talk about is the risk capital there? You can take the risk. They want to be very conservative. In the United States, it's more about can you wait 18 to 24 months to close a deal? I mean, that creates a lot of risk for a company. Particularly if you go to banking. I know a lot of the banks. I think they should be allowed to do deals. They're very, very reluctant because they can't wait. One of the last bank deals in the United States took 3 years. And I think, if I remember correctly, there's a 90-day regulatory requirement. Well, obviously, that's not taking place anymore. And we do have to fix these things. You want an active, healthy M&A market.
Just quickly, if policy...
And they're not all bad for competition, even though I think it's true in certain cases. But, we've just become like an anti-M&A country, and that's a bad idea.
Okay. Just let's say that there's somebody else in charge of the FTC, and there are some different kinds of rules and sticks that people have to advance over. How much consolidation do you expect in the banking industry?
Yeah. So for the FTC, and I want to make very clear about this, they say to a hammer, everything's a nail. They're a little bit like that. But it doesn't mean they aren't right about certain things they say. I just want to separate that. Look, I think there are 4,000 banks in the United States. They're all in a different position. You could be a very profitable community bank. So I don't think the idea you have to merge is true. But if you're competing in a certain business for certain clients and certain sites, you may need economies of scale. And, they should determine. So you do need consolidation. A lot of the, mid-sized banks want to do it. They shouldn't be hampered. And they would tell you, if I can't do it, you're basically ceding the ground to JPMorgan. And I think that's unfair. They should be allowed to merge. Their boards of directors should be allowed to make that decision based on what they think is in the best interest of the shareholders. This notion that government should get involved in every single little bank deal, I think is just wrong. And, they're adding social values to everything they do. It should be about safety and soundness. And a board of directors that says we need to merge, we want to merge, probably means they're heading for a safer and sounder bank. That's their desire. You can give a lot of examples where it doesn't work. It doesn't mean it shouldn't be allowed.